Nazara is the next company which is on our radar. The company's been on an acquisition spree. They've made investments worth 196 crores. And we're going to talk about these investments now. Nitish Mittersain is joint MD and CEO at Nazara. Nitish, good to have you with us here. Good morning. So I want to start by asking you, this is acquisition number what this year? First, I mean, it's a string of acquisitions, right? And Funky Monkey. I mean, I think it's a brand that at least all of us here in the studios know very well. I mean, I think the last I was there was maybe 10 years ago, but I've spent a lot of money, a lot of time there. But just tell us a little bit about this. Go on.
Sure. So in terms of acquisitions, as you know, Nazara has a established playbook on M&A where we acquire businesses and then scale them profitably. And I think with the capitalization that we did of the company, we had already told you that we will be doing this series of M&A to set the stage for growth in the coming years, and we are just very busy executing that. In terms of Funky Monkey per se, I think we've got a thesis that offline entertainment gaming is going to become equally big, and there are also hybrid opportunities where many of our digital IPs can be integrated into the offline as aspects of the business. So I think we're creating a full vertical in offline. As you know, we recently intimated we were the successful bidders for Smash and Funky. While we've not yet taken control of that business, still in the process of NCLT, we've also, acquired Funky Monkey because our approach for the offline gaming and entertainment is going to be a multi-format, multi-IP approach, like we normally do for our other businesses as well.
Okay, hi Nitish, good morning and good to see you. I want to talk a little bit more on Funky Monkey because, obviously my kids are a little bit younger. It's not 10 years ago, but 10 months ago, 10 days ago, I could have been there as well. But what is the pending cash in books after making these investments?
We have, I think about between 300 to 400 crores of cash that would be enough. Yes.
Got it.
And all these businesses that we are acquiring, right, are all cash generating profitable businesses, which are self-reliant, and therefore they won't put any pressure on our existing cash. They'll contribute.
Got it. All right, Nitish. So, we got that out of the way. What about Funky Monkey? A couple of years ago, I had my kids' birthday party there. I didn't know they were doing only 7 crores of turnover, and I contributed, I'm telling you, to that. Yeah. That's moved to around 20 crores. Now, you'll have done the acquisition of ballpark. The 100% of it, if you did it, would be at around 72 crores. From 20 crores of revenue potential with margins of around 20%, you clearly see that this business can scale up. So what is the scaling plan of this business with the profitability? And also, is there a provision for you to go ahead and acquire the remaining 40%?
Sure. No, valid question. So in terms of this valuation, right, the 72 crores valuation that you spoke about, that's a post-money valuation that includes 15 crores of primary infusion that we have done. And therefore, if you look at pre-money, it would be a little lower at around 55, 57 crores.
Okay.
In terms of their business, they're currently operating 11 centers. Their current MRR is a little higher than the revenues and EBITDA reported up to last year. So I think overall we bought a good valuation this transaction. I think for growing consumer demand, consumers want to go out, want socialization, and I think formats like Funky Monkey or other formats that we're looking at can be really conducive for that. I think 11 centers in a country like India is way too less. Can we have 50 centers? Can we have 100 centers? Can we have multiple engagement points there beyond what they're currently doing? Can we deploy some of our engagement and retention methods that we use for our digital gaming into these offline worlds? How can we bring synergy with what we do online? Let's say Kidopia, which is a very popular IP with kids, into the offline world. So I think there are a lot of ideas that we have. And we will spend the next, few months working with the founders and management team to build. The good news is that the founders have really, run this business very efficiently over the years.
Sure.
They've gone through COVID, etc., while running it efficiently. So we think they're a strong team back to scale this business to the next level.
Got that, Nitish. So definitely you're looking to build on the sort of the brick and mortar, the real world experiences as well, apart from the online ones. Now, you've also spent about a little over 4 crores for a small stake, 4.7% stake in an AI-powered education platform. And I think a little bit of money, not a little actually, fair amount of money, 148 crores has gone into existing subsidiaries. Just help us, and we only have, it's a short chat because it's pre-market, but just help us understand how does all this tie into the revenue profile? Because what's happened in the last couple of quarters is that revenue growth has been patchy to sluggish, right? First quarter, it was down 1.7%. Second quarter picked up to 7%. So all these small, smattering of little acquisitions, how does it all tie in? And, what is the revenue expectation now for the full year and more importantly, next year?
Yeah, so I think it's important to understand we are setting the stage for growth for the next 3 years and not chasing short-term revenue. Quality of revenue is very important for us, and therefore doing the right thing. I think the right growth and right revenue and the right EBITDA and cash flows, more importantly, will be generated. So we're very confident of the coming quarters as well as the coming years. AI is, I think, imperative for all companies to look at. I think for a digital gaming company like us, AI can be a very big opportunity and can also be and we can also have disruption if we are kind of sleeping on it. This particular company, the founders have done some really interesting work. I think there are a lot of synergies with what
On
we
the
are doing.
revenue piece, Nitish, if you could just tell us about the revenue piece. Can you do 10% growth this year?
We should be able to. But I think we're not in the business of 10% growth. We are setting a platform for much, much larger growth.
All right,
going
and got that. Nitish, we'll leave it there, and then we'll have you back for a longer chat, and we'll look ahead into 2025 as well, and what Nazara wants to do, and we'll do that. Thank you very much for joining us on the latest in terms of investments that you're making.